What's up everyone, Dylan here. I wanted to hop on to do another short and sweet analysis video. With that said, I'll hop right into it. So, the last few weeks I've been stressing the 5740 level, basically saying as long as bulls continue to defend that, they are in control. I still stand by that, but I revised that level a little bit lower, so let's get into it. I'm going to try my best to make this as clear and concise as possible. We go back to this time, right? This was back in late August and early September. What I'm going to do is I'm going to mark a previous resistance area, okay? From, let's call it 57.25 to 57.30, you could clearly see several times, right? 4 or 5 different times there and then 2 more times over here. That area acted as resistance, okay? Ever since price broke above, we have come down to test that area 4 or 5 different times where bulls have been defending it very, very, very clearly, okay? So that is the bull / bear line in the sand, okay? If you want a little bit of a different representation of that, we could go to SPX and we could use the previous all-time high back in July, mid-July, right? Same exact concept, right? Ever since we broke above that previous all-time high, ever since then, dips back down to that general area have been defended, okay? So, whatever line you want to look at, but it basically shows the same exact context, okay? And very important to note that this is occurring while there's a lot of moving parts in the market, right? You have election uncertainty, right? You have tons of headlines coming out on the election race. You also have geopolitical risk from Ukraine and Russia still, from Israel and Iran. That's been the main one over the last couple weeks. So you have all of these different headlines, bearish headlines, fear headlines, right? All of these different things are occurring, yet the bulls continue to defend that general area, which is very, very impressive and should not go unnoticed, okay? So as long as that area continues to hold, the bulls remain in control, technically, okay? So that's very, very important. Another thing that the bulls have been holding is the anchored VWAP from the September 11th low, okay? So, which is, it's moving up, but you could see, right, we're on a 4-hour chart, we'll drop it down to like a 90-minute, right? Each time price comes into that area, the bulls are able to kind of recover price in a very, very quick manner, right? We have not closed under that on, say, the 90-minute chart, okay? So clearly those two blue lines, right, 57.25 to 57.30-ish, and the anchored VWAP have been getting defended very, very well, okay? So that's very important, okay? Now, the issue, right, the big issue for the S&P, despite the bulls still being in control above that area, the biggest issue is the fact that the VIX has been so strong. And I covered this on the last video. I went ahead and drew a wedge, okay? And this is, I'm going to redraw the wedge for you guys, right? This is the wedge that I drew last week in the video. And I basically said, if price breaks out of this, it's going to put additional pressure on the S&P, basically deterring the S&P from, sustaining on rallies, okay? And that's kind of what has happened, okay? Now, the S&P has not seen any continuous downside pressure, but there has been a lid on each of the rallies that have, attempted to move higher in the last 2 weeks, okay? So the strong VIX is part of the recipe as to why these recent rallies have been short-lived, okay? So as long as that continues to be strong like it has been, it's going to keep that pressure on the S&P, okay? So I'm using this area right here. I'm going to go ahead, we'll make it red for previous resistance, right? this was a resistance area back in early September, okay? You could see a few different tests in that general area got rejected, okay? As of today, it broke above for the first time since early September, okay? So this is my general area of, where I'm going to kind of gauge sentiment, right? If as long as VIX stays above that additional pressure is on the S&P, where it might struggle to sustain value on rallies, okay? On the flip side, if the VIX starts to fade back lower and then breaks below this, say, 21.4 area and stays below, then if the S&P decides to rally, it should have a much easier job sustaining value, okay? If the VIX continues to the upside, my next level to the upside will be using the 50% fib from the highs of August to the lows, the recent low in September, okay? And that stands right at 25.9. So that's my next key level to the upside. Will it test there? Who knows? But if it does, I will kind of look at that general area as a potential area of resistance, okay? But for the near term, I'm definitely going to be looking at this general area, which stems from 21.4 to 21.6 on the October VIX futures, okay? So if this thing continues to strengthen and continue to move to the upside, and the S&P fails to sustain value above that 57.25, 57.30 area, right? If you have both those pieces of context occurring, that should set up for a larger drop on the S&P 500 futures, okay? Now, the next couple levels down include this one right here, which is it's at 56.75, which was previous support back in mid-September. And then below that, something that I've mentioned numerous times, remains the 100-day moving average on the US 500, which is just the cash index for the S&P 500, okay? And this has been a very, very solid area of support in the year of 2024. So, yes, it has broken beneath, but the vast majority of the price action has been above that, and in this year it has acted as support multiple times, as I just highlighted. So that's only, I believe, like 3.5% lower. Yeah, 3.25% lower. So if the VIX really starts to get going to the upside and puts additional pressure on the S&P, and the S&P breaches that area that I was just pointing out, 3.5% is definitely in the crosshair, right? It's definitely feasible to get down there, and it might occur sooner than you think. But like I said, as long as the S&P continues to sustain value and get bought on dips in a quick manner, and hold over that 57.25 area, the bulls are in control, okay? So one thing that I do want to know, I found this pretty interesting and kind of goes hand in hand with what we've been seeing on the VIX with such strength, is the, I'm just going to show you. So this is since 1950, S&P 500 average returns, right, monthly returns, and then it shows you the blue one is just all the non-election years, and then the yellow one, the yellow bars are the election year. So this being an election year, you can see every single monthly return, right, since 1950. When it comes to October, the general average has been a net negative month, okay? So that's where we are now. Now, obviously, this stuff isn't guaranteed, right? This is just a general average of those, the past, 73 years, okay? But, it's glaring that this thing has clearly underperformed in October during election years. So with the strong VIX and the S&P continuing to, kind of test this general area, it could, that type of information could dampen the bullish sentiment, right? Who knows? But I thought it was interesting enough to share. Okay, so that's that. And then I went over two different equities, individual equities with you guys last time, and I want to show you guys how those ended up, playing out. Right? I went over this Apple one, and I said, hey, we haven't necessarily closed above that 233 area, right? Even with last Monday's strong close. And you could see since then it failed there and, came off about 5% from the last time I did one of these videos. So that 233 area remains very, very important for later tests, right? Future tests. I also saw this one too. There's a trend line that technically we breached for the first time since August 5th. And, if Apple continues to drop to the downside, that won't be, too good for bulls in terms of the NASDAQ, right? The tech-heavy NASDAQ, okay? On the flip side, NVIDIA broke above this trend line that I, showed in the last video, okay? It broke out right when the market opened this morning. I believe that breakout occurred at like 9:31 a.m. Eastern time. It was about 1 minute after the market opened. And at the climax today, the 130 strike calls expiring this Friday were up as much as 300%. So, it was a large move for a single day. And there was no coincidence there as it broke out of this kind of longer term trend line. Okay. However, notice that despite NVIDIA being up, say 4%, when it was near the highs, the S&P and the NASDAQ were never green on the day. So, which is pretty interesting, right? A high beta name like NVIDIA that has a lot of influence wasn't able to really push the overall indices higher, meaning the overall breadth of the market wasn't as healthy, right? Just because these semiconductor names were strong doesn't mean the rest of the 11 sectors in the S&P were strong, right? So NVIDIA's strength today was not enough to keep the overall market strong. So hopefully these areas will help you. Like I said, there's a lot going on in the market that can cloud your judgment with the geopolitical risks, the election stuff, the hurricane stuff. So it's very, very important to kind of, use specific levels, right? Just like the ones I gave you in the S&P and the VIX, and use those areas as a way to really gauge sentiment and figure out, what the market is going to do next, right? As opposed to trying to read through all the headlines and try to assess the market that way. You're just going to be overwhelmed, and it's going to be very, very difficult to do that. So that's it for me. This week we have Thursday CPI, Friday PPI. So the later part of this week can get pretty volatile. So we'll see how all of that plays out. Peace.